Hello, everyone. This is Andrew Berman from National Mortgage Professional, and you are watching another Mortgage Leadership Outlook, where we come to you live every Wednesday, 4 o'clock East Coast time, 1 o'clock Pacific. We've started this back actually in March of 2020 when all the chaos was going on, and we just didn't know how to deal with it all. So I said, let's meet with some of the greatest leaders in the mortgage space, and we had just some of the greatest minds. And I am so excited to actually have the time to talk with John Keratsis today, who's the president and CEO of Deephaven, the newly named president and CEO of Deephaven. John, thank you so much for joining us.
Andrew, thanks. It's just a pleasure to be here.
Yeah. So it's amazing. I said, we literally just were about to go live, and I apologize. We were like 40 seconds late. We just had a technical difficulty. That's the bad side about going live. But something, I love this because I get to have conversations and have casual conversations. And when it's recorded, you go back and say, hey, something, maybe we should go back and do this and edit that. But when it's live, it's just a conversation like we would have at one of our events.
Absolutely. The best way to have it.
All right. So listen, John, there's a lot of things I want to talk to you about. I want to talk to you, of course, listen, we got to talk about the mortgage broker. I know Deephaven is all about, third-party originations. We're going to talk about that. We're going to talk a little bit about, you and I, we had this conversation earlier this week, talking about being like the Four Seasons. We'll talk a little bit about that. We'll talk a little bit about, what originators can do out there. But before we go into that, let's go into your history. So let's talk about you were actually founded and grew up to a significant proportion Boston National title, and actually eventually exiting that, taking actually position or exiting ownership, taking a position there, and left there to join Deephaven. But talk to us what got you involved in the title business from that led you to create Boston National Title?
Yeah, and thanks. So I was up in Boston, and this is really 98 through 2004 or 5. I had graduated from college and moved back to Boston. That's my roots. And I was looking at the landscape, and I started to buy and sell properties, much like you see in the marketplace today. Back in 98, 99, there were a lot of condo conversions going on, mostly in Boston and in San Fran. And those were the sort of two poles that started to rise those tides. And as I was doing it, every time I'd have a closing and I'd do a condo conversion, I'd look at the closing, I'd look at the HUD, at least that's what it used to be called, right? And on that HUD, there'd be this line item that said title insurance. And Massachusetts is an attorney state, so I'd always question the closing attorney on what the fee structure was for, what was behind it, what the claims look like, et cetera. And there's always a secondary part of that. Should you get an owner's policy, yes or no? And that always came up, and I thought, well, you know what, maybe I should. It's not a lot of money, and it probably makes sense. Well, the more I started to study that model, I thought, boy, what a neat business. I mean, there's no real inventory. Here I am looking at real assets, spending time and labor focused on building those assets and selling them. I wonder if I could learn more about the title insurance business. So I did. Through closings, I had met a network of people who were really, really good. Moved that team to Florida and opened Boston National. So if you can imagine that recruiting methodology, we're talking February of 2006, really January, late 05, I had moved to Florida to set up shop and would bring people down in the middle of the dead of the winter from Boston to Florida, looking at palm trees, enjoying their time. And
that's not fair.
Yeah, well, it wasn't fair at all. I mean, it was the ultimate recruiting methodology. And then the really shameless part was this, Andrew. So we had rented condos in South Beach in Miami, and we had such great times. And I said, look, this is where we're going to be. It's going to be phenomenal. Just wait till we open the doors. So everyone who I had known for a lot of years said, yeah, John, we're coming down. Let's do this. So we opened up in Port St. Lucie, Florida. And Port St. Lucie is not Miami Beach. It's a great spot, and it's a suburban area. But if you've been going through this courting ritual and you open up in Port St. Lucie, it's not quite the same effect. But we grew quickly, and just a solid team. Most of the founding members of that team are still with B&T, just tremendous. So I had a couple strikes of really good fortune. I had met a super wealthy guy, a billionaire named Joe Carey in 2007 through a mutual contact. And Joe had expressed interest in doing something from a partnership standpoint with me. And we finally got to a point where we had signed an option agreement. 2008 happened, which, as we all know, was 2008. And I executed on that option agreement and partnered up with Joe, which was needed. 2008, probably everyone who's listening to this podcast was in the same boat. Yeah, those were really dire times, and I wasn't sure how to reinvent ourselves. Countrywide was our anchor tenant in terms of clients, really solid client for us, and offered remarkable tailwinds. But when they went away, and they were effectively the last lender standing before 2008, that was it, right? It was that point in time when you realized, oh boy, I better reinvent us and do it quickly.
John, I mean, like, what percentage of the business that you had was coming from Countrywide? Huge, gigantic, client. And by the way, like, I'm, to have Countrywide as a client, because we could talk about actually, what went wrong and everything like that. But I know actually that Countrywide demanded a lot from their employees, demanded a lot of the best from their vendors. So you have to be at the top of your game to do business with Countrywide. I used to hear actually people call Countrywide country fried because they would fry you, like you would just, because you would work your butt off there to be able to keep up actually to pace with them. So, and I heard that from employees, I heard that from vendors. So, like, what was it like actually to achieve those top accolades to be able to earn Countrywide's business?
Yeah, it was tough. Very service first, very demanding. And it's funny. I think we had a little bit of a different model. We were focused on hiring attorney closers just because that's the model that we had in Massachusetts. So we were looking for just a more echelon sales approach and more importantly, a better closing experience. So even though, well, I'll get into this because it was a quick pivot for us in 08 to 09 to something that looked more like private wealth, but that service first model wasn't lost on us. And we probably spend more time on building out our FTE count and making sure that we had caliber people than we did on technology. If I could have revisited, I probably would have focused a little more on technology, but it was such a service heavy, sales focused organization, Countrywide, that you had to make sure that you could represent them as best as you could. And we did a great job of it. It was a sad day when we realized that they were going away or taking on a different form. That was challenging for the entire team.
And what percentage of orders were coming from Countrywide?
God, it was about 95%. I mean, we had scaled very quickly. And, it's interesting, Andrew, when I first opened up B&T in 2006, there was an article in the New York Times about HSBC. And they talked about how HSBC was building out the center to handle loss made and loan mods. And it was on the west coast of Florida. And I just remember reading this article thinking, oh, come on. I mean, we've been saying that this market is going to probably start to ratchet down for years. There's no chance that it's just going to flip off like a light switch. Little did I know. So and that was probably the first month we were open. 18 months later, when they'd already sort of manifested a partnership with Joe, it was pretty clear that the tea leaves weren't looking very good for us.
Oh my goodness. Okay, so here you go. So you're like, all right, we have 5% of our business, 100% of our overhead. Yeah. How do we actually to shift? So you shift to this like different model of being high net worth. And I'll tell you actually, like, well, here's what I knew. So we had a conversation about this. I want to share this with the originators because I want to talk to our originators so they understand how they could actually start to look at their business to possibly look at a transformation. Because we're not going to have actually the refi opportunities that we have, and there's a huge opportunity dealing with the high net worth borrowers. So talk to us a little bit about how a little deeper about how you switched gears and went actually to change B&T to make it to not only survive, but made it so it's a sexy target for Blackstone to be added to the Blackstone portfolio.
Yeah, so it was interesting. So here I am, all excited. I've got this billionaire partner behind me, and he's challenging me to turn the world on fire and to really grow out a title company. And it's my first time in a private jet and everything else. And what was great about that is my very first meeting with him was with Countrywide. And I just remember leaving this nice dinner, and it was great. And this was towards the tail end. And one of the execs that were really trying to champion there looked at me he said, "Hey, do you mind taking a quick walk with me outside?" I said, "Yeah, what's up?" And he said, "Well, you guys are really building something great, and it's really encouraging." I said, "Well, thanks. We're really looking forward to hopefully growing this partnership." And he said, "Well, I was thinking you might be hiring." And I remember getting back on Joe's plane, and he said, "How did it go?" And I said, "I don't think it's good, Joe. I don't think we're going to get any business anytime soon from any banks or non-banks out there. I think they're just focused on what everyone was focused on in '08, surviving." So I thought about it a lot, did some soul searching, and realized that if you have a guy with strong depository relationships and you have banks that might be able to open doors based on that, maybe you just need to reinvent the model. So I did. I pivoted from the Countrywide model very quickly, and I should back up. Everyone in our business was getting into REO because that was the volume.
Yeah,
we just weren't big enough. We didn't have the infrastructure. We weren't licensed in enough states. We really didn't understand REO, and frankly, looking back, I'm not sure anyone did, at least to the size and scale that was to come. So we pivoted to a private wealth model. We focused on trusts, LLCs, cross-collateralized loans, anything that we could work with to provide an echelon service. We knew that we had a better service model out of the gate. So now it was just a question of, okay, how do we bless that and graduate it to deal with the client base or to work with the client base that might better be encouraged by our service? And we did. So we started working with some prominent banks and lenders just on that model, and grew quickly. And then, Andrew, by about 2011, 12, we had built a good name for us, a good niche model throughout the industry, but HARP volume started to come out. And what we found was a lot of these same banks and lenders would say, "Boy, you did such a good job for us on the private wealth side. Could you pivot?" And we did. We started to pivot into consumer direct, distributed retail, et cetera, to the point where, boy, by 14, 15, Boston National was probably a top 20 size title agent in the country, and starting to look at buying an underwriter because we're leveraging the underwriters enough that for not just because you need an underwriter as a title agent, but to try to create new products and to try to get innovative on the front end, that we realized it was probably time to figure out either a sale or something that looked like a sale. So what's really interesting and kind of sad about this is, I'm very sad about this. Joe had bought the World Trade Center. It's actually a 99-year lease 1 month before 9/11. So had to deal with everything emotional and otherwise that went through with it.
Goodness.
And had a lot of reluctance to get into something that looked like an underwriter with capital reserves and just a larger investment in general. So Joe and I had some thoughtful discussions, and I realized it was probably time to sell. So that's what we did. We started looking at potential suitors in 2015, and by 2016 we sold to a Blackstone portfolio company called Incenter.
Wow, that's awesome. So let me ask you. So Joe, I obviously was a mentor, had a major impact on your life. They say actually, and I really got to figure out where this quote came from. But they say actually, like we're mostly influenced by people we meet, books we read, or places we go. Would you say actually that, like, if you looking over all those three categories, would Joe be the most impactful person in your life? Obviously, not counting parents or anything like that, but would Joe be that person? Is there anyone else actually who also deserves actually an honorable mention, or a book you read, or a place you went?
Yeah, there have been quite a few. It's pretty amazing. Joe was, look, I would start with my mom and dad. I had just an amazing childhood, and they're phenomenal. My dad was my hero in every which way. And passed 4 years ago, but I still think about him like we all think about past relatives. Joe was in a lot of ways a second dad. I mean, he took me under his wing and really championed us, Boston National, before anyone else did. My former boss at Incenter, Bruno Passeri, is one of the best and most premium human beings I've ever met in my life.
Oh my goodness!
Oh, he's just an absolute all-star, and it's an honor to work with him for 4 years. And I would say the team. I mean, Andrew, it's amazing when you really think about things that influence you in your career and your life. A lot of it is it's the employees. I mean, it's not just what you see them do. It's artwork, but it's watching that growth and the growth of some of the folks that I watched from young in their career to 10, 15 years in their career, and seeing them go up that scale. God, it's it's probably the most rewarding thing I've witnessed.
Wow. So listen, I mean, so we've had multiple conversations, but you and I just talking. I mean, your love for the BNT team is just phenomenal. I mean, you just from the people that you amassed there, the legacy you created, the way you kind of pivoted. So what the heck is going on at Deephaven that you were so excited to say, "Hey guys, I love you, but I got to go over here." So tell me, what excited you about Deephaven that had you leave actually, this unbelievable opportunity that made you say, "All right, it's time to actually make a switch and go on from the vendor side to the lender side"?
It's a great question, and certainly one I spent a long time soul searching on, and really kind of calibrating what I want to do for the next decade. And I'd say a couple things. BNT is they've gone to the moon. They've done such an incredible job. It's a great team over there. Incenter, every brand that they represent is as good gets. Our CFO at Boston National, Mike Witt, who was instrumental at the growth and helping the team, left when we sold to Incenter and went over to Deephaven. And we've been thick as thieves for a lot of years. He was also a partner at Boston National, so we were in the trenches together. And we, of course, with that, would stay in touch. And I'd say, "How's it going over there?" And he said, "It's phenomenal. Matt Nichols, the founder of Deephaven, is just a progressively thoughtful guy and just a prolific thinker in so many ways, and has a really deep-rooted understanding of capital markets, and was a first mover at Deephaven, created this marketplace that really we hadn't seen since before 2008. And in this version, a much different version." And the more I got to talk to Mike, the more I realized, wow, what an opportunity it is to see this team and to watch the alignment of the stars. The other thing, Andrew, is, when you're on the vendor side and you have 400 odd clients, and every one of them is just remarkable in that they're your clients. They're sending you business. You embrace that, and you start to look at some of the clients who are doing different innovative things, and some that have maybe a lift on their curative side, or some that have an underwriting discipline that's a little better than others. And from a vendor standpoint, it's a really unique position to look from, because when we calculated at the title company all our financials, we would look at pull-through rates. We would look at every KPI you can imagine, because that's how we would generate our financials. So we would look and say, okay, this particular client has this turn time, is doing business in these states, is locking loans at this point, is ordering title and appraisal at this point. And we would be able to generate what our revenue numbers would look like based on their propensity to close. And with that, you start to really home in on those particular client attributes that are more positive. And when you put them all together, you could generally, in theory, build out a model where you get the best of breed just based on what you're seeing really, really, really good clients do. So in looking at that and looking at Deephaven, especially with the flexibility of the non-agency space, you can look and say, wait a minute, if I don't have to fit in a GSE box, in a Fannie or Freddie box, is there a way that I could transpose all the knowledge that I've learned in working with echelon clients and the best of breeds and the largest clients in the country? Can I take some of that and in almost a toll gate fashion on the poles that sit between the consumer and the investor, push those together, truncate that process, and really work on the refinement of it? And most importantly, can I do that outside of the limitations that you get with Fannie and Freddie? And the agency business is great. It's been tremendously strong. But I was looking at that thinking, God, yeah, there's definitely an opportunity. So about 15, 16 months ago, I started chatting with Matt Nichols, the founder of Deephaven and then the CEO. And I said, Matt, I'd love to start talking to you a little more about that. I think there might be an opportunity for us in the long run to do business with you. And that conversation turned into, and really just focused on the non-QM side of the non-agency side. And that conversation turned into, boy, John, you seem to know a lot about this. Why wouldn't you just join us? I said, no, I never going to leave my team at BNT. They're phenomenal. And Andrew, at some point in your career, 15 years I'd been with the same company. I felt like the Cal Ripken of the business. And I just thought, you know what, if I'm going to do this, I probably need to do it now. And most importantly, the team at Deephaven is just bulletproof. I mean, every single leader here, every employee I've met, they're just really, really good. So not different than what I had left at the Incenter and Boston National side. So here I am.
That's amazing. Well, I'm not sure those who have been involved in non-QM and on the wholesale lender side, they know actually Deephaven really powered a lot of the early movers in the non-QM space. So while Deephaven might have only actually become familiar with the mortgage brokers in 2019, the non-QM lenders that were offering their non-QM loans in 2018, 2019 were very, very familiar with Deephaven. So that's great. And Deephaven right now is just wholly focused on third-party originations, right?
Yeah, that's right. We so when Deephaven was created, it focused and really, again, was the first mover in this product set on the correspondent flow platforms. And they really have it down to a level of refinement that's second to none. It's It's beyond impressive. And for me, now being 2.5 months in, it's neat. I've met a lot of our clients and certainly the ones that we've had legacy relationships with. And as we've gone through the lineage and the history of Deephaven and where it started and where it is today, it's amazing how deep these relationships are. And it comes down to just trust. These clients send over their business, and it's because they just know that the Deephaven team here is going to do a phenomenal job at it. And we've been expanding. We will continue to expand. We won't and have no intentions anyway to get into retail. But outside of retail, we want to continue to flourish.
That's awesome. So I wonder if you can actually maybe give some kind of advice or guidance. So obviously, our originators are facing a changing market right now, and some are actually looking at what can they do to possibly position themselves in a new area. And when it comes to non-QM loans, a lot of business owners, a lot of high net worth. So I just wondered if you had any kind of guidance or just kind of little bit of tips that you could take from your experience in transforming B&T, to create that. We talked about almost like the Four Seasons analogy of how B&T became that. If you could give that advice to our originator clients on how they can start courting, possible wealth managers, high net worth clients.
Yeah. I'll give you a couple thoughts on that. So, it's amazing, Andrew. When we were creating the private wealth platform for B&T, we started coming up with narratives or analogies to back the platform. We knew what we were doing, but explaining it was always a little bit more challenging. So, and ultimately what we came down with is, hey, we're still providing title services, right? We're not doing anything all that unique. At the end of the day, you get a title policy and you move from there. But we realized that, to what you and I had talked about, the difference between checking into a DoubleTree or a Four Seasons is either way, you're expecting a really nice night's sleep, a comfy pillow, and no crazy noises from your neighbors, no distractions from the streets. You just want to go to bed. But at DoubleTree, you get the cookie, and that's awesome. At a Four Seasons, you have an expectation of an echelon of service, and unless you don't get that, your expectations are going to be on par with what you paid for. And it's the Toyota Lexus analogy. It's the same thing. I mean, I'm driving a car. I'm going from A to B. Whether or not it's a Toyota or Lexus, you expect reliability, you expect it to get you there, you don't expect to have any hiccups. But in a Lexus, you just feel like there's going to be a little bit more fanfare. It's going to be a nicer ride and a smoother experience. It's not different than what we saw on the Boston National side. What's interesting to me, especially new in the non-QM space, it's amazing. I listened to Brian Filke, and he said, we probably shouldn't define it as non-QM anymore. We should probably call it non-agency. And I think he's right. This was on a non-QM seminar that I attended virtually, I think about a month and a half ago. And non-agency is probably more appropriate for a lot of reasons, because it's basically anything that doesn't fit into the agency box. And I'll chat with you in just a minute on that end. But when you consider where we're going now, if you were to compare GSEs in that business to the New York Stock Exchange, and you were to think about non-agency and relate that to NASDAQ, it's a very different model in the same market space. So the New York Stock Exchange, it's been around for 170 years or so. It's pedigreed, it's long, it has a very fixed box, and it is what it is. And you know what you're getting into if you're listed on the NYSE. NASDAQ came out in the 70s, but by the 80s, it was a very different vehicle. It was focused on innovation, on alternatives, on technology. And when you look at it today, it really was doing and filling everything that the New York Stock Exchange wasn't doing. It was NASDAQ, and NASDAQ had its ebbs and flows, but generally crescendoed. And if, again, you look at some of the echelon companies on NASDAQ today, they're tech-inspired, they're tech-infused, they're innovative, they're product-heavy. I look at our business the same way, and I look at the potential the same way. If you're to really consider non-agency, right now we're defining non-agency logically by everything that's not agency. So what a weird way to look at the world, right? So how do you define yourself? Well, we're exactly what they aren't. Okay, well, that's kind of clunky. So what if we really consider those poles that I talked about earlier in the conversation, and we've got the buyer, the consumer on one side, and the investor on another. And if you put those two poles together, everything, and I mean everything in the middle, is just friction, right? It's just unnecessary stuff that gets in the way of connecting this pole to this pole. And through that, you have the GSEs, you have title, you have appraisal, you have diligence, you have everything that comes together. When you consider non-agency, if you were to really dream aspirationally and say, let's not call it non-agency anymore. Let's look towards a world where non-agency represents a true consumer focus. When we're out there looking at that landscape, trying to understand and digest what those consumers want before they even know they want it, can create products that aren't available today because they're not available today, because no one's thought of them yet. No one's dreamt them up. And if we can align with our lender clients and say, listen, help us bird dog those opportunities, survey the landscape with us and decide what we can go after and what we can't, we can create, incubate these products. And if we have the right capital partners in the back, and I'm very confident we do, we can now create these bespoke products to make sure that we're giving the consumer exactly what they're looking for. So in kind of a NASDAQ fashion, I think we can create a different marketplace that's differentiated, tech-inspired, and focused on trying to get to exactly the end that we want, which is what is it the consumers want and what is it the investors want? Yep, Andrew.
Yeah. So, and it's almost like, I don't know. It seems like more like the Apple approach to innovation, because listen, Apple, like, I didn't know I need these. Like, this is the dumbest thing, actually. But like, when these came out, I was like, that is so silly. Why would I ever actually? I don't need that. The iPad seemed like the biggest waste of time. The Apple Watch, I'm like, why? I hate watches. And now these are all things that have actually that have been brought to me, and now like they're a part of my life. I didn't know I needed them. So it's like it seems like your approach is like, hey, we need to figure out what does the borrowers need that they don't even know that they need, but once they get it, they are going to need it, and it's going to be a part of actually, it's going to be a part of actually the business, not just doing business in a way that, hey, we'll do any kind of business that you don't do.
That's right. You simply can't envision a world today where you're doing business without a smartphone. It would be impossible for a consumer in the US today to look at the world without Amazon. I mean, there are certain staples now in our consumer environment that simply weren't available to us 15, 20 years ago. And now that they are here, I mean, Google's one of them too. Yeah. Look, this medium we're on right now, this wasn't available 20 years ago. 10 years ago, it would have been clunky. 5 years ago, it wasn't anywhere near as refined as it is today. It is amazing how fast that pace is. And I believe that the non-agency sector can really focus and get creative on those fronts and create stuff that, look, it's fun.
Yeah. It's exciting. It's exciting. So, all right. So what do you see for the next couple of years? For Deephaven and the brokers that are going to be working with Deephaven.
Yeah, growth, and more growth. we're on a spree on all fronts, just building more and more capacity to make sure that we take on the new clients that we're starting to ingest, and building new relationships there. And then we're getting very focused from a technology standpoint. There's a lot that I've had exposure to over the last 5-6 years, that is the gilded edge of technology that fits almost like cartridges in this chronology of loan fulfillment, where your loan starts with an application through a POS and ultimately ends with the connectivity to the investor on the back end. But throughout that, there are a lot of toll gates or cartridges where you can deploy technology in a fascinating way to make sure that you not just get lifts, but you create a better environment, better reporting, better KPIs, et cetera. We will build that out quickly, mostly transposing that from where we saw it in my former life, and plug that in. And then, Andrew, it's really important to us that we share that with our clients so that they can get those same lifts across the board, so that ultimately we can help consumers in a faster fashion.
Fantastic. It's an exciting time, actually, to be involved with actually non-QM. I'm sorry, non-agency.
There it is.
I'll get that. It's an exciting time, actually, to be doing business with Deephaven. I'm so grateful for you to take the time and spend with us today.
Andrew, it was absolutely my pleasure, and I thank you.
Fantastic. And by the way, listen, to our audience, for the last actually couple of weeks, we've been starting to put actually these episodes on all the podcasting platforms. So you can now catch Mortgage Leadership Outlook on whatever your favorite podcasting tool they're using, whether it's Apple, whether it's Google, whatever it is, Spotify, we're out there. So if you want to be able to take this with you when you're driving, at the gym, because we don't suggest driving with the video up on your dashboard, go get it out there. And we can come to you live again next week at 4 o'clock Pacific, 1 o'clock East Coast time. So thank you very much. Hope you're having a great March 17th. Happy St. Patty's Day. And we will see you next week.
Thanks, Andrew. Happy St. Patty's Day.
Thanks. Happy St. Patty's Day.